when it comes to ownership, the only ownership category that you need to consider are the non-retirement financial assets. Because retirement financial assets, you're never going to change the ownership structure because those retirement accounts must have you as the individual participant as the owner. If you are not the owner, it's not your retirement account. You can't have a trust or an LLC own your IRA, your 401k, your 403bs, your pensions. They must be owned by you as the participant. That's a requirement under the tax code. Today's question is from Miller Hilliard, one of our members inside the UpLevel community. He says this: I recently updated my financial structure setup with a trust, holding companies, and various business entities following the Real Wealth Matrix framework. I am moving my brokerage account into the trust, but I'm trying to decide if I should have the trust own the brokerage account directly or own the brokerage account through an LLC that the trust owns. Any advice or thoughts? Wonderful question, Miller. In fact, I do recall this question. This was in the community just recently. I did jump into the community and I did offer a very quick high-level answer, if you will, to that particular question. But I'd love to be able to dive a little bit deeper into that with regard to today's session so that a lot of our members can get value from that same opportunity to have that question answered. Because I know a lot of members have a very similar question. A lot of members are trying to figure out how do they apply the framework that is the Real Wealth Matrix to their own respective lives. And as you know, if you've gone through the Real Wealth Matrix training that is available inside the community, you know that there are 4 spectrums of income and assets that exist within one's financial life. We have the personal spectrum, which would incorporate things like your homes, your automobiles, your personal use automobiles, that is, your personal use homes, like your residences, your vacation properties, things like your extracurricular vehicles, like your automobiles, your airplanes, your boats, your artwork, your jewelry. That's all found within the personal category. Inside of the portfolio category are all your financial assets. Now, there are 2 general types of financial assets. You have retirement oriented, which I refer to as qualified financial assets. And then you have non-retirement financial assets, which are non-qualified financial assets. When it comes to passive, those are things like your real estate that is purchased for investment purposes, like rental real estate. It also includes businesses that you're investing in that you are not materially participating within. And then you have non-passive, which are your active businesses, the businesses that you're personally materially participating in, or your W-2 activity. That would all fall into the non-passive spectrum. But in this particular case, the question really is involving the one spectrum that is the portfolio spectrum. And when it comes to ownership, the only ownership category that you need to consider are the non-retirement financial assets. Because retirement financial assets, you're never going to change the ownership structure because those retirement accounts must have you as the individual participant as the owner. If you are not the owner, it's not your retirement account. You can't have a trust or an LLC own your IRA, your 401k, your 403bs, your pensions. They must be owned by you as the participant. That's a requirement under the tax code in order for that to be a qualified retirement vehicle. But for the non-retirement assets, which would include things like your personal brokerage accounts, your personal financial accounts, all of those financial assets can be owned within a real wealth matrix structure. Now, there are 2 general approaches. There is the general approach that simply utilizes what are referred to as personal property trusts, PPT. These are simply a version of a revocable trust that accounts for and allows for the ownership of things like financial assets. You may be saying, well, Edward, there are trusts that are part of the matrix at the very top of the matrix that you talk about all the time. Is that what you mean? Yes. The types of trusts that I typically refer to when I'm talking about the trust at the top of the matrix are revocable trusts. And when we work with outside counsel, like for instance, with our clients that are in our elite program, our protege programs, when we're the ones assisting with those outside drafting attorneys, we are always incorporating language in those trusts that allow for the ownership of things like financial assets. So yes, the trust at the top of the matrix could be an avenue that you use to own your financial assets. However, I often will suggest an alternative approach. approach, still within the real wealth matrix design, where we would still have trusts at the top of the real wealth matrix. But I would leverage a holding company in Wyoming to own financial assets, at least one holding company. Now, many clients would opt to have multiple holding companies for different types of financial assets that they may have. Like, for instance, they may choose a holding company for bank financial assets. They may choose a different holding company for brokerage-oriented or investment-oriented financial assets. But regardless, the concept is I would use a Wyoming LLC as a holding company to be the thing that owns the financial assets. You may ask me why? Why, Edward? Why would I want to have a Wyoming LLC be the entity that actually owns the financial assets? Well, it has to do with asset protection. You see, a revocable trust at the top of the matrix has no asset protections at all. But what I do know about you is that you are a human being, which means you live your life outside of your businesses. You do engage in activity that could potentially put you in a scenario where a risk event happens, where you cause harm to another party. It could be an automobile accident. It could be simply walking down the street and knocking someone over by accident and causing them injury. When you are out and about living your life and you cause someone harm, there is the opportunity that they could litigate against you personally. And when someone is suing you as an individual, meaning they're not suing your business for a harm that happened in your business, but they are suing you for a harm you personally inflicted upon them, there is the potential that the stuff you own could be used to satisfy or mitigate that particular risk event. When it comes to that process, it would not always result in them being able to take your stuff, but there could be a scenario where they could, meaning there's not enough insurance, for instance, that you have, maybe not enough automobile insurance coverage or not enough liability like umbrella policy coverage that exists in your financial life. That could mean a court could award a plaintiff the ability to take some of your stuff. Now, your financial assets are the most liquid things that most people would own. And that typically becomes the target in a litigation event because they're liquid. The plaintiff doesn't have to worry about trying to sell a property or sell a business. They can simply take your financial assets and have access to a high level of liquidity pretty quickly when they do that. So how could you shield those financial assets from that outside party? Well, if you've gone through the Real Wealth Matrix training, you know that there are two forms of liability protection. There's the inside out liability protection, which is harm that occurs inside of a business entity that is surrounded by a limit liability structure like an LLC. But there is also outside in liability protection. And that happens through the layering of entities and the selection of which state you use to form an entity. For instance, an LLC formed in Wyoming. Wyoming has significant asset protections that are built in to the statutes for LLCs. And the specific limited liability statutory protection that I'm concerned with to surround your financial assets is something referred to as a charging order protection. What that means in Wyoming, if there is a risk event and someone is suing to get access to that LLC, the only remedy that a litigant has, a plaintiff has, when the LLC is formed in Wyoming, the only remedy they have is to get something called a charging order, which gives that harmed party, that plaintiff, the ability to stand in front of you for any distributions that are coming to you from your company. Now, you may say, wait a minute, Edward, that doesn't sound like a good idea. That means that someone can stand in front of me for my distributions. Well, yes, but remember what I said. That is the only remedy they have. They are not permitted to take ownership of your LLC, which means that you as the owner can simply choose not to take a distribution. Because remember, the only remedy they have is to stand in front of you. They cannot force you to take a distribution. So you could just choose not to take. Well, you may say, wait a minute, Edward, that doesn't sound good to me at all because now I don't get my money. Well, no, remember what I said. The only remedy they have is the standing in front. You still own the company. You can choose to give yourself a salary. A salary is not a distribution. Well, you may say, well, wait a minute, Edward, that doesn't sound good to me either. I don't want to necessarily take a salary. Well, again, you own the company still. They can't take that away from you. So you can just simply choose to give yourself a loan. The concept of a charging order will prevent someone from being able to take your portfolio from you, to take your bank account from you in a litigation event. What they will only be permitted to do is to stand in front of you for any distributions coming from that Wyoming LLC, distributions from your portfolio, for instance, or your bank accounts, for instance. And when that happens, that essentially creates this opportunity to engage in discussions, settlement discussions specifically, where you can say, hey, listen, I'm never going to take a distribution. You want $25,000 from me, I'll give you $3,000. It encourages settlement discussion. Asset protection is not necessarily a guarantee that you won't get financially harmed by a risk event, right? It's not a guarantee of that. But what it does help to do is it helps to encourage the counterparty to work with you in that settlement process. So that is why I'm a proponent of utilizing the approach in the portfolio spectrum of your financial life to have a trust own a Wyoming holding company, which would own your brokerage accounts. I hope that helps to answer that particular question. And I would absolutely encourage you, if you have not yet jumped into the Real Wealth Matrix training inside the community, be sure to do that because I go into much more detail regarding the structures and the entities. And if you need additional assistance in getting to the outcomes you desire and you're not one to do it yourself, you can always choose to try to work with us and have us do it with you. And we have a few different programs where we do that. In our community, we have the Elite program, which is an opportunity for us to fast track your journey of creating your Real Wealth Matrix within 90 days. And we work with you hand in hand in order to get that done. And we pair you and partner you with our trusted counsel all across the country to be able to facilitate that process. Protege is a much more in-depth consultative program where we're still doing that over that 90-day period, but we're engaging so much more beyond that over the course of, I believe the entire program itself is about 6 months long. It is a much more detailed approach. So if you are interested in getting more help with that regard, be sure to reach out to the community and let our community moderators know that you'd like to have a discussion regarding that. Setting up a business the right way can be difficult, especially if you don't know exactly what type of business entities to use and where to even establish them. When it comes down to it, I wanted to make it simple for business owners, so I put together an entire course going over this step by step. If you want to learn more about that, all you need to do is click that link in the description below.